In this video, learn how to use Trader Joe. It is a decentralized exchange on the Avalanche network. I'm going to show you how to navigate the platform, trade tokens on here, and also lend out your tokens to earn some passive income. There's a few ways you can do that on the platform, so I'll show you each way and then go through how it works and the pros and cons of each. Check out the timestamps in the description below if you want to get to a certain section. So come to traderjoexyz.com. It isn't traderjoe.xyz, it's traderjoexyz.com. And then you have to go up to the right-hand side and connect your MetamAsk wallet. If you don't have a MetamAsk, go and download MetamAsk from metamask.io. It's a Chrome browser wallet extension, so download that, go through the setup process. I won't go through that here. If you need to know how, I'll link that video in the description, but it takes 10 minutes or so. Then what you need to do is add the Avalanche network to your MetamAsk. So come over to the settings right here and then networks on the left hand side, and you can see Avalanche network. You're going to need this information if it isn't in there. So the network name is Avalanche network. You can see this link right here, the chain ID and the currency symbol, and then click add network. You can also Google how to add Avalanche to MetamAsk, and it's in their documents right here, so you can see this information. It's right here, and I'll leave this link in the description. But that adds the Avalanche network to your MetamAsk, and then you can get going from there. So what you have to do on the right hand side, just click click connection, so the MetamAsk wallet actually connects to the app. The next thing you'll need to do is get the correct tokens in your MetamAsk wallet to actually go ahead and trade with Trader Joe. They are different coins, so I want to show you that right here. If you have a centralized exchange that you buy coins on, when you withdraw it to your MetamAsk, obviously get the address from your MetamAsk, so you can go up to your MetamAsk account right here, click copy address, and then come to withdraw. Binance, FTX, and Crypto.com have Avalanche coins and can withdraw. I'll leave them linked in the description if you don't have one of those yet. But when you are withdrawing the coins, look at the network. You're going to need the C chain, not the Avalanche chain. That's not going to work with MetamAsk. You need tokens withdrawn over the Avalanche C chain right here, and that will make them available in your MetamAsk to go through and trade on Trader Joe. One other thing that you're going to want to do is add tokens into your MetamAsk as well, the tokens that you want to actually trade. If you come down to the bottom right here, it says add Joe to wallet. So Joe is obviously the token of Trader Joe, and it will add this token. If you click add token right there, that is now added to my MetamAsk wallet. So if I bring MetamAsk up, you can see I should have Joe tokens right here that they weren't before. Now you can do that for every single token. So go over to trade like this and then choose any token that you want. Now you can see that I'm trading AVAX for USDC right here. Down at the bottom it says add USDC to wallet. So this is Avalanche's USDC. So if you click this, it will go through and you can add that token again. So I'm going to click add token, and then that will add that one to my MetaMask. So you can do that for any of the tokens on the site, and then you'll know that you've got the right token in your wallet. So now we can actually go ahead and trade our AVAX token into something else. Come up to the top and press trade. So it's just a very simple AMM order book right here. So, you know, I've got one AVAX right here. So if I click max, it tells me how much USDC I can get for that. Obviously I can choose 0.5 AVAX and it will work that out. Down here, you just press swap literally, and there's nothing else to do. This will show you the minimum amount received. So it gives me a quote here of $36 that I'm going to get for my half an AVAX. The minimum amount is going to be $35.89. That's the difference between when I press swap and, you know, when it actually goes through. There's a little bit of what's called slippage. Price impact, you can see this is nothing. If you're dealing with a very large amount, you may have a big price impact on the pool, which may negatively affect your trade. But, you know, anything under kind of 6 figures is absolutely fine. Liquidity provider fee, this is the fee that we're paying for our trade, and then you can see the route that this is taking. So this is actually going through wrapped AVAX into USDC.E and then into USDC. Again, we don't really have to worry about that. One thing on the right hand side you can see here, which is the settings, you can set your slippage tolerance. Now for a very, very liquid pair, which Avalanche USDC is, you don't need to really worry about slippage because it's a very liquid pool. If you're choosing a much smaller asset where your trade could seriously affect the price in the pool, then you have really two options. The first one is to set your slippage right here at, you know, a normal amount, and actually the trade may not go through, because if you impact the price of the pool 1% and your max slippage is 0.5%, your trade won't go through. The other option is just to increase your slippage, and this basically means that the actual trade price may be as much as 1% different to the quoted price that you get. So you can make this decision as you want. For liquid pairs, 0.5%, even 0.1% is fine. For more illiquid pairs, smaller pairs, you're going to have to set a higher slippage. But all you literally do is now press swap. You can confirm this, everything here. Press confirm swap. On the right hand side, a box will pop up. Obviously, you have to confirm that transaction and then pay the network fee as well. Now, what we can do is actually add our tokens onto the DEX and basically earn passive income from all of the trading fees that traders pay. So just like you saw, we traded and we paid a fee to trade. If you have tokens already in your wallet, you can put them on and then earn the trading fees that everyone else pays. So we can come to pool right here, and a pool is literally just a token pair, because obviously people need to swap one into the other. Each token pair trades in a pair, and so you can see each of the different pairs right here that you can actually go ahead and add tokens to and then earn passive income from all those trading fees. So what you can see is AVAX USDC right here, and you have liquidity. Liquidity is the value of those tokens in the pool, which is 117 million. You can see the 24-hour volume, which is the volume of trade in the last day, so that's 14.5 million, and then the amount of fees paid by traders. So traders in total over the last day have paid $36,000 in fees, and that works out to be an annualized yield for depositors at around 11.28%. So if you put these two coins into the pool, you can earn 11.28% yield per year from trading fees. Now, obviously trading fees differ day to day. So obviously this is what the APR works out at from yesterday. It can go up and down depending on trade. But what we want to do is add tokens into the pool to earn this passive income. So if we click on pool right here, you can see some information. And on the right hand side, you would click add, and then you would need to put some tokens in. Now what you can see is I don't have sufficient balance of USDC because I actually don't have any, as you can see here. So what I would need to do is go over to trade and basically work out that I would swap around one AVAX and I would need 74 USDC. Or what I can do is actually go back and then just click the Zap feature. The Zap feature will basically work out if I have one token, how much of the other one do I need to put it into the pool? Because obviously these tokens are in a ratio, because one is priced in the other. So if you click on Zap, you can do this. So what you need is to select a token. Now you can see Avalanche isn't here. You need to wrap your Avalanche to be able to use it. It's a little bit complex, but I'll go through it. So if we just click wrapped AVAX right here, we don't have any wrapped AVAX, but we have AVAX. Wrapped AVAX is a smart contract version that we need. So what we can actually do is go over to trade right here. And then what I want to do is search for wrapped AVAX. So what I'm going to do is click obviously my AVAX right here, and I'm going to swap it into wrapped AVAX. And what you can see is that there's essentially no price data right here, because this is essentially just Trader Joe swapping one into the other. So we're not actually trading, we're just taking our AVAX and turning it into wrapped AVAX, which is the smart contract token that we can use in the DEX. So if you just click wrap right here, this isn't a trade, it's more of a, just a wrapping. So it's the exact same amount as you can see. So click wrap, then you can go back to pools and then click Zap, and then you would have your wrapped AVAX token in your wallet. So you can click that, and then obviously you can select a token that you want to zap it into dependent on which pool you want to use. So if I want to use the AVAX USDC pool, I would click this, and then obviously I'd have one wrapped AVAX, and that will do the zap and basically give me a perfect amount of each token that I know that would enter the pool. So that would do everything for me. So you can see here, one click convert to LP tokens. So that goes back to the pool, and then you would have essentially some tokens of value in the pool right here. Now what else you get is something called an LP token. That LP token would go right into your MetamAsk account. So what you would have is a different token down at the bottom here, and it would show a value, and it's what's known as an LP token, liquidity provider token. It's basically a receipt that tells you how much of this pool that you have. So if you want to take your coins back out, obviously what you have to do is go to that pool and then click remove right here, and then it will know that you have a certain amount of LP LP tokens available, and then you can use those LP tokens like a receipt to swap in, and then you can swap your coins back out. So you use the LP tokens essentially as a receipt to tell you how many tokens that you put in and put out, and then obviously it uses those to pay out your annualized yield as well. Now, if you are looking to add tokens on and earn some passive income, we have to talk about something called impermanent loss, which can happen, and it's definitely something to know about before putting any risk assets into a liquidity pool. So impermanent loss happens when you have a price that can change from when you put the token into the pool to when you take the token out of the pool. And this is because if you think about it, this is a token pair where one token is being put in to swap for another. And so when the price changes, the amount of tokens and the balance between them has to change as well. And so this can create something called impermanent loss. Now, if you have two tokens here that are the exact same price, you do not suffer any impermanent loss whatsoever. So this AVAX pair will not suffer any impermanent loss no matter what happens to the price, because the price between them will always be exactly the same because they're just slightly different tokens, but they have the same value. One is just a wrapped version. What you can also see is a stablecoin pair like USDC.E and USDC will suffer no impermanent loss because they're both a stablecoin. They'll both be $1 forever, we hope, right? So no impermanent loss there. But if you have a pool like Joe AVAX, these are two risk assets that can both change independently from each other and so can suffer from impermanent loss. So what you need to do, the calculation here, is essentially try and predict what the price will be or the change in price will be when you want to take the coins out, and then obviously, work out that calculation. Now, you can come to a impermanent loss calculator like this one, dailydefi.org. And as an example, let's say Joe was $20 and AVAX was $100 when we put them into the pool, right? And then after, let's say 6 months, Joe went down to $17 and AVAX went up to $123 or $134. You can see the impermanent loss is 2.54%. So not really a massive deal, because if you go back and you see the Joe AVAX pair, it's paying you 8.77% in fees anyway. So take the impermanent loss that you may suffer right here, 2.5%, and then minus that off the yield that you're getting, and that will be your total yield. Now, obviously the thing here is that we don't know what these prices will be, and so we are just kind of assuming or trying to guess what the prices will be when we take them out, and obviously they may move a lot more than we suspect, but it's definitely worth keeping in mind impermanent loss when you're using risk assets that can change in price. If you want to know more about that and how I use DeFi and kind of work out impermanent loss when I'm trading and adding pairs in, I've got a couple of videos of that in my crypto course, so I'll link that in the description. You can see divergence loss and impermanent loss, calculating and tips, and kind of how to go about thinking of earning passive income, plus another 200 videos. So if you want to get that and then come into the private Discord groups as well, I'll leave those all linked in the description. Now though, we can get onto farms on Trader Joe, which you definitely want to use if you're adding liquidity, because this gives you even more passive income. Farms are essentially a way to incentivize users to come and add liquidity into these pairs rather than on a different platform. If you come up to farm at the top, what you'll see is all of the different token pools that you can add tokens into. And remember, you get those LP tokens when you add tokens into a pool. Those LP tokens you can actually stake in the farms and then get extra passive income on top. So I'll show you exactly how that works, right? So let's say we have a token pair on Trader Joe and we put Avalanche and USDC into a pool. Obviously we put that into the platform Trader Joe, and then Trader Joe gives us the LP token right here. So we have that LP token. Now what we want to do is add that LP token into the farm to add extra income, because it will basically give us extra. So what you'll do right here is obviously get your MetamAsk up, have that LP token in there, and then you'll want that LP token to put into the farm. So let's say the AVAX USDC farm, click on this, and it will show us the rewards that we're getting. So the pool APR, like we saw, is about 11.3%. So that's from trading fees that you're gonna get. But staking your LP tokens in the farm also gets you an extra 7% in Trader Joe tokens. So these will be added as a bonus 7% on the value of what you put in as an extra bonus in Joe tokens. So what you can do every so often is come down, it will show you how much you've accrued, and then you can harvest those back into your wallet. So you will be getting your Joe tokens into your wallet. So yeah, you're gonna get some Joe tokens. Now what you can do with those Joe tokens is either just keep them, and basically that's just a 7% amount of Joe that you've got, and Joe's a risk asset, it might go up and down, or what you can do is essentially sell the Joe tokens and trade them out for more of this token pair, and then add more liquidity into the pool, so you get more pool APR and yet more Joe accruing on the value of your LP tokens. You can obviously choose which way to do that, but if you do add liquidity into pools, use your LP tokens to get extra Joe as a reward. Now, if you have Joe tokens in your wallet from the farms, or maybe just buying them, you can use these in different ways on the platform to get an outcome that you would want. So I'll go through that now. If we go up to stake right here, this is staking the platform's Joe token. So there's really 3 outcomes right here that you can get from staking. The first one is SJoe. This is earning USDC stablecoins as a bonus for staking your Joe tokens. You can see the APR is 15% right here. Or you can do this, which is RJoe, and this gives you RJoe, which is able to participate in launch events, and I'll get into launch next. So if you want to invest in new tokens that are launching on the platform, what you'll have to do is stake Joe tokens and then get this RJoe, and that will let you invest in some of the new launches on the platform. And then there's another way which you can get VE Joe, or voting escrow Joe, and this will boost your farm rewards. So if you are LPing and you want to get even higher rewards, then that Joe can be staked into VE Joe, boosting the overall yield that you get from those farms. So if you do want to participate in launches and new tokens that are coming onto the platform, you can do that by staking Joe and then getting that RJoe. Then from RJoe, what we need to do is go over to launch, and you can stake the RJoe right here. Now, RJoe is a very special token for doing this, and it doesn't have really any value outside of basically staking to get allocations in some of the launches on the platform. So what you want to do is, obviously, once you have that RJoe, just come to stake, click max or whatever amount of want, and then you can stake that in here. Now, you may get some rewards here. It says, claim pending Joe, right? So you can, any Joe that you have from rewards from staking Joe, obviously claim that here. But then what you'll do is basically get an allocation to let you invest in some of the new tokens that are coming on. These are very small. You may not want to do this. They're, kind of random tokens. But if you do want to, obviously, you'll get an allocation in here, and then you can basically put AVAX into the pool, and then you start, becoming a liquidity provider for these pools. Now, one of the upsides of that is that when pools initially come online, they're usually extremely high yield, but obviously, impermanent loss, and there's a lot of risk here. But you can see what happens. So you stake Joe to earn the RJoe. You then spend that RJoe for allocations with the new liquidity pairs that are coming in, and then there's a period of price correction where users can withdraw the tokens, and then users will receive LP tokens in that new pair. This is something I don't really get into, but you may want to do it, kind of getting into new pairs. There are some opportunities here for some high yields, but there's a lot of risk as well. If you don't want to get into all of that, then you can just very simply lend out your tokens. If you have tokens sitting in a wallet that aren't doing anything and aren't earning any passive income, you may want to lend them out on the platform. This is very simple lending. So you just take your tokens, lend them out to someone else, and someone pays you an interest rate for borrowing them. And obviously they'll go and use them in different ways. But you can very simply come to the deposit section right here. So you can see Avalanche. If you deposit Avalanche on the platform, lend it out to people, you can get 3% as an annualized yield. And if you want to borrow it, you have to pay 3.8%. So I'm just going to go to AVAX here, and you can see the kind of lending market that's here. So there's 65 million deposited, and there's 9.7 million that's been borrowed. The utilization rate is obviously 15% of that amount. And then the collateral factor right here. So people, let's say they have $1,000 and they want to borrow some AVAX, they can borrow $750, right? 75% of it. So that's what's known as over collateralized lending. So those people always have more assets than they actually are able to borrow, and that obviously means it's safer for lenders. deposit APY is only 0.42%, but you're getting Joe as rewards as well. So you'll be getting those Joe rewards. What you'll want to do there is either leave them in your wallet if you want exposure to Joe, or basically harvest them and then sell them for more AVAX or more USDC, whatever you want to lend out, because you can lend out stable coins here, which actually have decent amounts, right? USDT has 5% deposit APY, which is actually very competitive. So you might want to use that as depositing. Literally just go up, press deposit, obviously put the tokens in there, and then you'll start earning that annualized yield. If you do want to learn more about how I use DeFi and you want to see my portfolio and how I make passive income from cryptocurrency and DEXs and DeFi, I have an entire section of that in my course, as well as videos and sections on investing and putting a portfolio together for long-term gains and passive income as well. So I'll link the crypto course in the description for you. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.